Bearish sentiments appear to be taking over midday trading activities at the Nigerian bourse. We're looking at the all-share index down for the year-to-date at 17.9%. Well, joining me for a midday update on trading activities at the local bourse is Ayodeji Ebo. He's the head of research at Afrinvest. Thank you so much, Ayodeji.
Thanks for having me.
Pleasure to have you on the show. Well, we're looking at the all-share index still trending in negative territory. I suppose the factors are still the same. Investors are trading cautiously and looking at the macroeconomic front, falling oil prices, the CBN struggling to defend the naira. There just isn't so much good news out there for investors.
Yeah, for most of what you have said is right. For most of the investors, trying to look at the overall macroeconomic outlook still looks very gloomy. When in terms of what we saw at the interbank market yesterday, naira traded as low, an all-time low of 184, which currently this morning opened around 187. So when this gives also tries to test the ability of the CBN to actually defend the naira. So for foreign portfolio investors, what they will be looking at is trying to reduce the exposure, such that if perhaps there's any further devaluation, when you look at the exchange rate risks, they try to reduce their loss.
Okay, but it will be a short-term hedge against exposure to the markets.
Yeah, but
because we're all waiting to see what's going to happen after the elections.
Exactly. So you can't really say it's short-term, apart from the oil price outlook decline. Also trying to look after the April 2015 election, then we can get a clearer picture of the direction. Okay. And we also, when we try to look at what will be the impact of the devaluation and the pressure of naira on some of the listed companies. We know that most of the goods are imported. So we expect that in 2015, cost of goods, especially for the FMGC, should also increase in 2015. But we are saying for investors that may want to buy in view of a corporate action, dividend yield would increase with the current levels of prices of goods currently, prices of stocks currently. So it still presents opportunities based on the low prices of some of these stocks. Now,
for the consumer goods sector, this year the index is down quarter to date in all the indices in negative territory, and we know that it's traditionally the safe haven sector, but it hasn't exactly played that role this year. So let's fast forward a bit. Going into 2015, which of these companies do you think investors could put their money on in terms of how they would maneuver the new macroeconomic environment? Because we're expecting some perhaps policies get towards the sector favorable. I mean, I would assume as the government tries to step up its diversification efforts away from oil to other high-impact sectors.
Yeah, in our own view, we feel the insecurity in the northern region will continue to impact the FMGC. So this will affect their top line, which coupled with the increase in cost of sales, for the outlook for the FMGC is actually very, very gloomy going into 2015. However, for some of the stocks present opportunity, like flour mills, which has received as a result of its divestment in recent times, the oil divestment in recent times, investors actually sold significantly on the stock. So we feel with the current price levels, it presents opportunities for investors to take some long-term position on a particular space.
Let's talk about agriculture stocks, the likes of Presco, Okomo Oil. As I mentioned earlier, the federal government's diversification efforts. I mean, it's become very glaring now that Nigeria needs to step up its efforts to diversify the economy away from oil, because we appear to be in a new oil price regime, and there's a lot of talk about oil prices not going back to that $190 per barrel levels that we saw from the beginning of the year. So do you, in terms of government policies, do you think that we could see more favorable government policies towards the agriculture sector, and do you think that these companies could benefit?
Yeah, definitely. We expect that these companies will benefit because now the government does not have any choice rather than to diversify the economy. When we look at what also account for significant part of the demand in dollar is importation. If government can take care of food importation in terms of rice, wheat, and reduce the demand for the forex in that particular space, we feel it will help boost the local production. So for Okomu Oil, for Presco, which are majorly the listed agricultural based company on the exchange, we feel government will come up with policies that can help increase their capital base such that they can, based on their own experience over time, they can utilize get a better return on the capital which that may be earmarked to them.
Because some analysts say that the government could step up efforts to reduce its food import bill. We're not sure to what extent or how far-reaching that policy or efforts would be for these companies. But would you be putting your money or keeping an eye on agriculture stocks in 2015?
Yes, I would, but I'll still be very cautious in line with most of the arable lands in the north are not cultivatable due to the crisis insecurity in the north. So, but for when you look at where some of these companies are located, Okumu Oil and the Haste, and what they actually invest in palm oil. It actually, when we look at the amount of import that is spent in that particular space, is not very significant compared to those that are into rice production, wheat production. Those that the demand for dollars in that particular space is huge. Currently on the stock exchange, we don't have companies that are really exposed to that particular space, rice production, listed. So investors should still be cautious in what investing in that particular.
Because I was going to the sectors as an alternative in terms of what options investors have. Because usually it will be banking stocks because they're the most liquid, and in terms of volumes traded on a daily, monthly, yearly basis, they pull the volumes. But we're looking at, of course, those headwinds in the financial sector and the banking sector. Banks probably reporting lower earnings from Q1 next year. So, I mean, in terms of options, are investors, where do you think investors are going to be putting their money mostly in?
Yeah, in terms of liquidity, for portfolio investors, the banking stock still provides the liquidity and also gives you the room for arbitraging. So, we'll still expect activities even in the banking sector, despite the depressed income that we're expecting from the banks. The foreign guys knows that once there's liquidity, if you decide that you want to exit, you can only sell the stocks. But when you look at some of the agricultural sector we spoke about, there's little amount of fund that you can invest in that particular space. If not, you get trapped if you actually want to exit. So we still expect if the banking stocks in terms of price to book multiples now looks very attractive, which is around 1 times. It looks very attractive. So investors should still, not just because of the gloomy outlook in the banking space, they should still invest.
They should still keep their heads up regardless. Thank you so much, Ayodeji, for talking to us.
Thanks for having me.
It's been a pleasure. That was Ayodeji Ebo, Head of Research at Afrinvest, taking us through midday trade at the Nigerian Stock Exchange.